everyone doing this morning? We had a interesting day today. A lot of equities are still waiting to open, so we'll be around for the US equity opens. Let me know what you guys are looking at. We'll pull up some charts. Speaking of, got a nice trade. I'd call this a little too close for comfort on my end. But in the trade group, I posted that I took a New Zealand dollar shot long today here at this peak. I just put in a 15 pip stop. There's your trough in the probability distribution. Here's your peak. Trade the peaks and stops at troughs. Pretty much sum up the strategy around range probabilities. Practicing what I preach here. I didn't get out here or here. I wasn't looking at the charts at those times. I am holding on for a bit more continuation higher up. But I also got this entry at a nice spot here on the weekly peak. That stops also in a nice trough here in the weekly low distribution. So I'm pretty much set. Probably I can hold this trade up to here. And if we get more continued good news out of the RB&Z meeting later this week, maybe we see that follow through up for, I don't know, from the current price, maybe hopefully another 70 or so pips. That'd be nice for me, huh? But New Zealand dollar isn't the one that's taking up all the headlines in the FX space right now. Actually, the Aussie dollar. Aussie dollar made a brand new high for the first time in 3 months. It made a brand new 3-month high. So here's November, October, September, and here's August. So here's the August high. We didn't quite crack that, but you give it 1 or 2 more pips, would have cracked that high, made a new, well, let's see here. You got this. Yeah, it's only going to be a 3-month high because you got to get past that for it to be a new 4-month high. I am kind of interested now in looking at the, at the yield spreads here. Long term, these yield spreads look pretty good. Comparing what the yield is right now to what it was 25 days ago, a month ago. These yield spreads are looking pretty good. Nice development overall. They're pretty neutral for the week. So comparing yield spreads for this week. Yeah, pretty flat, and on the day today they're actually down quite a bit. So this is not necessarily the best development for especially bullish price action. So I keep reading in my inbox today, oh man, you know, actually there was an article I posted it in the Forex trading channel Oliver Insights, Australian dollar. 5 reasons to expect the Australian dollar to rise into next year. And I was reading through that and I'm like, you know, there's a lot of hype around Australia, right? The rate hikes. Yeah. So this is the major chart that this guy is looking at. No. I'll go ahead and do a screenshot of it. Hopefully you guys can see that. So in that article, there's this chart interest rate gap between Australia and the US versus the Australian dollar. So the blue line is the Aussie dollar exchange rate here. Red line is the gap between the RBA cash rate and the Fed funds, the FOMC cash rate. And it looks like he's trying to say that the difference between the rate hikes and rate cuts between the RBA and the FOMC lead FX prices, but I look at this chart and I don't know. I don't know if that necessarily holds up. There seems to be other major factors here contributing to the price. Relative strength in the US generally, as it tends to benefit times of global uncertainty. So generally speaking, my best guess around more bullish expectations coming about for a lot of risk-on assets is as we get through the next 2 weeks, and if central banks all hold their policies and they don't get any more exceptionally hawkish and imply that they might do more rate hikes during the first quarter of 2024, which is not the consensus view at all. Right now, everyone is pricing in rate cuts, I think, as soon as, May for the FOMC. So the expectations right now are for rate cuts to start around the second or third quarter, fourth quarter, sometime between the second and the fourth quarter next year in 2024, depending on which central bank you're looking at and depending on which institution you're reading outlooks from. Nice to see you in the chat again, Sama. Oh, man. So it seems like the expectations around all these central banks finally reaching their terminal rate and holding at those rates is reducing the amount of uncertainty that institutions have around various asset prices. It's one less moving factor that dictates the change in asset values. So taking that into account, maybe the yields become a more important factor going into the first quarter of next year, which is immediately why I pulled up this indicator here at the bottom of the chart, because that is the yield spreads for FX stuff. But I don't know, I'm looking at this right now and you can see all this green, and now we're getting a more white candle here. That's not a huge positive development. Now these yields are still net pretty bullish, But you can see in this little table here, and I'll make it bigger for you guys on mobile who are watching this on your phones. I'm looking at this column here, spread 3. This is looking at the difference between what the yield spreads were today versus 25 days ago. And that column, those yield spreads, that is dictating most of the direction right now. And you can see the more intermediate term and short term spreads. They don't make up most of this. And in fact, if you just turn off this long-term spread, you remove it from the calculation entirely, you start to get more negative view here, more negative changes in the yield spread that are actually in favor of the US dollar here. So I'm cautiously optimistic. See, when it comes down to future expectations, understand that those are future expectations, and you have to figure out, well, are those expectations for the week or the month or the quarter ahead? And figure out, well, do those long-term expectations line up with what's happening actually right now? And is there any new information that could be coming out that impacts how those expectations may change? It's a really big factor to consider, especially if you're going to approach markets discretionarily. You have to take that into account, and how those particular, let's say, economic events might change assets you're especially looking at when it comes down to trading. This is why it's incredibly important to actually know what it is you're trading and all the different things that actually impact the asset that you're looking at. And you actually really just know what you're doing. So, with all that said, let's also check out those yields on New Zealand. Those look a lot more positive to me. Those look a lot more positive to me. Let's also bring up the long term here. Ooh, yeah, those long term ones look pretty darn negative. So this is interesting. New Zealand short term is improving more significantly than Australia, but Australia is getting all the headlines right now. So I wonder if by the end of this week, after, let's say, if these yields continue moving in the direction that they're moving, if those headlines start to flip and start prioritizing putting New Zealand in their headlines. Let's check out the euro. Yeah. Similar view for the euro dollar as the Australian dollar. Very nice, positive, strong development in yield spreads up until, I mean, today it's starting to look negative. It's finally printing negative. I think it was a day or two ago in one of my first streams back here. Hey, Richard, nice to see you. I said something along the lines of, actually, I'm just trying to remember right now. Nah, I lost my train of thought. I'm not going to try and force it. It was something related to these yields. Been up all night programming some new features for those probability pivot points. Getting things set up for the next major update to the indicator. No ETA on it, but hard at work. And also on some other things, some side projects, not TradingView related. Very excited about those. USD CAD. Actually, I am kind of interested in looking at USD CAD on the day, specifically because I checked out these yields earlier, and you can see how these yields are now getting a bit more positive here. So I'm wondering, maybe on a weekly chart here, if we hit 137 sometime this week. Quite a choppy day, huh? Those are some big wicks. I'm gonna bring up the probabilities, yeah. Would not be surprised to see some prices above 137 here. Let's see. Definitely getting right into business here. Yeah, would not be surprised. I mean, look, for as much as you can hype up these risk assets, things still on the economic calendar go through. If you haven't read any of the week ahead outlooks from some of these institutions, there's an outlooks channel in the Discord, and you can just go through links that take you directly to some websites. And those websites will show you, oh, here's the week ahead outlook from, you know, Danske Bank. Here's the week ahead outlook from S&P Global. In fact, I would like to bring up that week ahead S&P Global. Here we go. This is the sort of stuff to read. Eurozone inflation watch. This little blurb here on the right in gray. With the PMI, oh yeah, the PMIs came out pretty meh, I think, for Europe. They weren't so great. PMI output gauge leading the trend of official CPI in the economic bloc. The near-term trajectory expected for the latter continues to point lower for the time being. Services inflation continues to outpace goods. Yeah, there it is. Central bank meetings. RBNZ, Bank of Korea, Bank of Thailand. Worldwide manufacturing PMI comes out Friday. Eurozone inflation, employment, so a lot of Eurozone data. The latest November HCOB flash Eurozone PMI outlined heightened cost pressures stemming from wages, while output prices also rose faster in November on the back of services sector, selling price pressures. Eurozone unemployment data will be eyed for labor market resilience. RBNZ is expected to hold. They're not expected to do a hike. But people are going to be eyeing their statement particularly close. Let's see. Flash PMI signal. Jobs decline as economic malaise drifts into the fourth month. Europe, US divergence persists. Composite flash PMI, meanwhile, held steady at 50.7 in the US versus 41. It did rise in the last reading, but below 50s contractionary for the PMIs. And Japan's PMIs, their composites lower. Selling price inflation ticks higher. I think there were a few outlooks that pointed out the risk of inflation effectively going sideways into December and January, which would potentially do some more hawkish commentary out of central banks going into February and March. Those are some particular far out views, but I don't know. It seems like so far we're on track for inflation to hold a bit. So yeah, I'm not too crazy about getting, super significantly long risk assets here. I did take that shot on the day, and New Zealand does have a bit of a better yields outlook. But yields obviously don't guarantee price movement. They are one component in a model. I'm looking at the pivots for December here on Euro dollar, and I see they're very expanded. One of the things I gotta put back into the indicator that's actually in Wayne's pivots is the pivot condition icons that show you, hey, the next period's pivots are expanded. They have wider ranges than the prior pivots. And when you have wider pivot ranges, you have a bit more uncertainty when it comes to trading pivots in these particular ranges, because when you have expanded pivots, those ranges, they go from maybe 50, 80 pips to over 100. And then that ends up bringing it down to focusing on maybe these ranges more significantly. Oh man, trading views loading a bit slow today, huh? We still haven't traded at any significant peaks yet on Euro dollar for the week here with range probabilities. I'd be looking for, when we start trading around these spots, for any opportunities for the week. With the negative yield spread, I don't know if I would be buying that low though. Man, that was a decent shot for a short, huh? Especially on the negative yield spreads coming in. You can see how it colors the bars red. Yeah. Let's start looking at closing odds for the day. So, euro dollar probably goes sideways from here. Aussie dollar. Seems to be holding at this spot here, but I wouldn't be surprised if it fell another 10 pips effectively sideways into the end of the day today. New Zealand dollar probably gonna close sideways from here. And the dollar CAD probably sideways too. It's above that 50 line here, so yeah, I wouldn't be surprised if this went effectively sideways as well. However, those daily yields are catching up. They are getting a bit more bullish here. So I'd be more cautious about a potential rebound into the end of month here. Canada's economy is especially weak here. Yeah. Here, let's highlight this spot and pull up the pivot probability highs. Yeah, see, now you can probably see what I'm talking about, that overlay. That bit of overlap. If those yield spreads continue to improve, yeah, I wouldn't be surprised if we're at 137 sometime this week. Let me know if you guys want me to check out a chart or two. Because pretty much all day today, and I mean, maybe we get some volatility tomorrow, but in my opinion, I think today is pretty much done. I might be speaking a bit too soon. Let's see here. Oh yeah, the equity markets opened. Just check out our ranges here for the day. Yeah, someone who took a shot around there probably was in a drawdown for a little bit, but depending on your broker might have got you stopped out on that, depending if you got a super wide spread. Oh, yeah. I don't know. It seems like it might be a better idea to take shots around that peak there, around 45.32. This area here, around the 30 handle. Maybe something along those lines here. Yeah, no major data coming out today. Retail sales. Australian retail sales, that's going to be I mean, the prior number was 0.9, forecast is 0.1. If it comes out as forecast, that's going to be a lower number. It's still positive, but that's going to be a negative rate of change. 45.32 is weekly M2. Really? It is. It sure is. Here, let's look at the low seasonal odds. Yeah, around that S0.5. You can go into the probability pivot point settings and use the legacy M style, right? So if you're still using M2, M1. A little side note on these legacy M pivots. They go negative. M0, it just arbitrarily starts here between S3 and S2. And in order to get midpoint pivots with this style of label below S3, you have to go M-1, M-2. Also, they're not symmetric with the standard pivot point label styles. That's why, and also when I try to, when someone who's been trading pivot points is like, well, what are midpoint pivots? I find it much easier to easily convey the idea with these 0.5 styles. But the legacy M pivots are there for a reason. Like, an ungodly amount of people use the M style pivots or the midpoint pivots. So they're there if you want them. You got a limit order there. Well, just know your odds when you're taking risk, because I mean, I'm looking at the seasonal data too, and that seasonal data again, should we have significant bearish expectations for this week? I'm not terribly certain that we should. When I look at this, I think there's reasonable expectation that people would be buying around this spot. Unless some new information comes along and changes my mind, then I'd probably look at this S1.5, which is 45. Right? Just below 45. Yeah. Let's go ahead and check out a few other assets here. How about the NQ? NQ looks pretty darn similar. It does look more bullish on the seasonal data. We can load up NQ. NQ gives a different look at things. Similar look with the seasonal data, not so similar look when you look at the whole distribution. I mean, this is what you'd call unimodal. You got one fat peak, and then it just starts tailing out like that. Well, if there's any bulls with particularly strong convictions, this would have been the spot. And you can see some people stepped in and pushed the price up and created that wick there. Let's check out Apple here. Oh, we have a gap. We only have 15 samples here, so I'm going to go to a higher time frame and manually load the weekly pivots. So now we have 42 years of samples. Yeah. It's a bit hard to say where the low is going to come in, other than maybe that spot. But these odds are pretty darn flat. Turn off these next periods so they're just a little easier to see. Yeah, looking at the distribution, it looks like you have a bimodal set up here. A bunch of your lows come in right around here. Then you have a little trough in this spot. And then another peak. So if someone is particularly bullish, they might be taking shots right at this spot here. Let's go ahead and check out those highs. Yeah, also kind of bimodal. I'd be willing to say the top probably isn't in for the week yet on Apple. Let's see. Has Apple actually been out for 42 years? Well, let's set this to 1980. Go back into the chart history and yeah, December of 1980. Yeah, it's been around for that long. Yeah. You can see all this old data. Up until 1982, you just have closing data, it looks like, and then you get the high-low close of every day. So yeah, I'd probably be, yeah, again, on all these risk assets, from what I'm looking at, I'd probably be on the more cautious side. Actually, well, look at that. Yeesh. Yeah. If I was trading the Australian equity markets, I probably would have taken a shot. Let's go back to, yeah. I'd like to see the S&P go a tad lower and then up, but that's just what I'd like to see. That doesn't necessarily have to happen. Yeah. Well, I guess now's the time to ask for suggestions. I'm gonna bring up gold and oil. Yeah, you can see probably some people were taking shots around here on the short side for gold. I wonder how it did on the day. Oh yeah. Well, looks like the people taking shots around this spot here, they weren't able to get any follow through. Oh wow, check that out. So here's your low for the day on gold. And there's a peak. Yeah. That looks like a pretty reasonable shot to take for bulls. Probably would have got out like right away. Wow, it's like an instant, like at least 10 points if you incorporate bid-ask spread and whatnot. Let's check out the closing odds. Yeah, probably a bit of a negative drift into the close. It'll probably end green. The day will probably end green. Let's bring up CL. Ooh. That's an interesting look. You have two peaks for the closing data distribution for the day on oil. Well, there you are. You're at the edge of your distribution. One spot you can take shots at. Probably look along the lines of that. I'm not totally in love with taking those kinds of shots, but they're there. They are there, in fact. Yeah. So probably closing around 75.6 today. Just a slight positive drift in the end of the day, maybe. Just based off what I'm looking at here. Well, low could be in for the week seasonally. We haven't moved above the weekly central pivot, so maybe there's some room to the upside. Yeah, I'd say the high probably isn't in for the week on oil. Let's go back. Man. That wick low. That spot. You have to be pretty aggressive to be buying at that spot, but I don't know. I think 76.5 is still in the cards for this week on oil. Let's check out that New Zealand. Is that holding up? And it's closing flat like I expected. It did give me that nice spot here. Again, on those weekly odds. So hopefully we get some drift over the next 1 or 2 days going into the RB and Z meeting. We'll see how that trade plan, how it kind of pans out. Let's check out that dollar yen. That thing's moved quite a lot, huh? Well, it's in a trough here. It's in a low probability spot of finding a low for the week. Let's Let's load some seasonal data into that. Yeah, I think my opinion still hasn't changed all that much. My expectation is still to see 148 this week. Yeah. So that's a bit beneficial for some yen strength here. You can see all the yens are strong right off the bat today. I wouldn't be surprised if outside of, let's see here, probably USD yen goes to 148, New Zealand yen's probably done. Wouldn't be surprised if CAD yen fell too. Well, if CAD yen's also falling, if I remember correctly, there were actually a few outlooks looking at Canadian pair crosses against Australia and New Zealand, and people were taking the short side on the Canadian pair in those FX crosses. So maybe that USD CAD does have some legs of maybe going sideways, having a bit more of a positive drift this week. Go ahead and load that closing data. Yeah. So you kind of have two spots. Well, based off what I think is going to happen, I'll go ahead and put in an arrow, if I can just find it. Probably into the close here. Let's go ahead and put in the current date. And we'll come back to that line day by day as we do these streams. Check out how this is panning out. And if we get any more significant US dollar weakness, and if that ends up benefiting the Canadian leg of this thing. But considering so many outlooks are just straight up bearish across CAD on all sorts of other FX crosses, Canadian dollar might be one of the weaker performing pairs, I think, this week. What do you guys think? I could use some feedback. Yeah. Just gotta be careful of how those yields are changing. Yeah, Rich. If oil price is stable or moves higher, that would benefit CAD. I saw an analysis that looked at the correlation between CAD and oil, and it turns out that that relationship has been going lower and lower and lower because of a lot of the policies in the Trudeau government interfering with the productivity in the oil industry. It turns out that there's actually been an increasing correlation between positive correlation between oil prices and the US dollar because the United States has been producing so much more energy. So, yeah, while just casually I agree with that, some of the latest developing research on the relationship between oil and the Canadian economy, it's been pretty mixed. It's still positive, the relationship, so I'm not going to discount it. But it's definitely not as positive as we might remember in history. I don't know, I'm pretty much done for the day now. I'm just waiting to see how all these prices close. I'm interested in seeing how the recent positive change in New Zealand yields. See if that gives New Zealand a boost in the rankings as far as FX performance in the G7 currencies. So it'll be interesting to see how things develop over the next couple of days. But yeah, there's not much else I'd say that we can look at. I'm just going to take a look at Euro 50 here. On the daily range. Ooh. Check that out. Man. What a nice spot. Let's go ahead and check out the next period's range. So these are tomorrow's ranges. Wow. That is such a crazy move. Freaking the Euro 50 moved close to 9%. 8.5% so far from this low. Wow. How about for the week? Yeah, I would not be surprised if we reached 33.40 sometime this week here. It does have a bullish skew, so most of the closes that occur during the 48th week of the year here for the last 20 years on Euro 50 end up closing above the central pivot at least. Where do the lows usually come in? Wow. Yeah, would not be surprised if it bottomed out right here, and would not be surprised if it came down one more time, but that'd probably be for a lot of people to buy the dip spot. It really depends on what ends up moving you down there. If we just end up moving down there just due to some nominal economic data coming out, so long the future uncertainty of the economy is not rapidly changing, there aren't any new wars that start, hopefully some more positive developments out of Israel and Ukraine, right? I mean, you see one positive development out of Ukraine and you could easily see Euro and European stocks move higher in as like a relief rally. But people have been talking about that sort of move for ever since the Ukrainian war started. Alrighty. Well, I pretty much have said everything I've got to say for today. I'll be back tomorrow and check out some of these daily ranges that we got here. And I'll be in the trade group following up on that New Zealand dollar set. And I'll be watching that RB and Z meeting quite closely. I'll definitely be streaming around that time. Alrighty, you guys. I'm gonna call it for today. Nice, simple, straightforward stream. Hope you guys enjoyed, maybe learned something. And I'll see you guys in a bit.